Hey folks, Dan Frio here, the Mortgage Update. Today is, I got a phone call, May 19th, 2020. So what happened today in the market, what we're going to talk about right now is what happened in the MBS market. Great day for MBSs. I apologize I didn't post in the last couple days. I was completely locked out of all my Google stuff. And unfortunately, YouTube is a big part of Google, and I couldn't get in anything. So I'm back. And yesterday I did a complete video, and then I realized I couldn't get into YouTube. But yesterday we saw a bump up in rates, believe it or not. And that the biggest concern there was the stock market got some news that the economy is going to reopen and a whole bunch of other stuff. So the stock market surged almost 1,000 points. And usually in the perfect investment scenario or world, stocks go up, bonds go down. And I'm going to explain why we go over the number that I'm going to go over in a second, because it's a bond that actually determines or creates or dictates mortgage rates. And then Federal Chairman Powell, he runs the Federal Reserve. We're going to go over some information that he came out with today to help boost some confidence in the economy. But on another side, GDP just came out, and it's actually the worst, I think, ever. So that shouldn't be a surprise to anybody. And like I've been saying, I'm going to go through some technicals with you guys, but basically go over, briefly some of the things that I normally monitor, and then why I'm not monitoring them now is, I hate to say it, but they're virtually irrelevant. Employment numbers, we know they're bad. I mean, you don't have to be an economist to say, oh, there's a lot of people out of work. That's a given. Gross domestic products, basically how much production we create in the U.S. Most of the manufacturing companies are shut down. Thus, nobody's manufacturing anything. So, that we don't really have to go over that number, because you don't have to be Einstein to figure out there's nothing there. Inflation, there's really, food inflation and gas have spiked. Everything else has kind of come down. Nobody's really buying anything. So those are the things that I normally watch. But I haven't been lately because, I'll say it again, they're irrelevant. So we're going to go over that. The stock market's getting a little bit of a hit today, and I predicted that yesterday. I wish I could have posted yesterday, because I said mortgage rates are up because the Dow Jones is up about 1,000 points. There's going to be a pullback tomorrow, and thus rates are going to come and ease a little bit. And exactly that is happening right now. There is some news out on the forbearance front. For those that have been sitting on the sidelines saying, I'm going to do this forbearance so I can skip 2 mortgage payments or 3 mortgage payments or 6 mortgage payments. There's some guidance that finally came out to say, if you do this, you can do that. And if you don't do this, well, then obviously you can't do that. And I'm going to show you what I mean by that in a minute. And then what else is, and then I'm going to go through some pricing. And I try to do that every Tuesday, to go over and say, here's when I say pricing, I mean interest rates. Here's the interest rates out in the world, or out in the country. And I scan 2 or 3 different systems and saying, this is where normally most people go to if they want to kind of get some rate quotes or just get a gauge of what's going on in the market. So we're going to go over their numbers compared to where mine is. Could be good, could be bad, I don't know. And today we're going to focus on FHA. So let's get to it. Why people follow my channel? Well, we watch or we monitor this right, not that. We monitor this right here, okay? And why do we monitor this? Well, just like I said before, this is a mortgage-backed security. It's a bond that trades on Wall Street, and it is the bond that determines or creates mortgage rates. So this number here represents what is happening to the price of that particular bond, all right? So in Bond 101, meaning just the educational tools of that, the basics of bonds, if you pay more for a bond, so the price goes up, you are getting a lower rate of return or a lower margin. In this case, it is driving down mortgage rates, okay? Great day for us in the mortgage business. Maybe, kind of, if you haven't been locked in. Most of my clients that I have locked in, we've beat the trends. So we even have better rates than that are being posted right now. I locked in a good amount of people in the last couple weeks. And if you're locked in, we are still better than we are yesterday and we are today. So don't fret on that in that area. And I'm going to show you again where my interest rates are compared to the rest of the markets. So what happened today is one of the biggest things is the economic data out is housing. And housing's getting crushed, but not as bad as we thought it was going to be. And basically you would think the whole arena would be shut down. Well, it's not. And there's supposed to be, even in my view, I think as soon as we turn the light switch back on, people forget fast. And I'm still going to say in 3 to 6 months we're going to be not back to normal, but we're going to recover fairly quick. A lot of companies, a lot of bigger companies, a lot of the smaller companies, hate to say they might not be able to get through this, but a lot of what Congress is doing right now and the Fed, that some news just came out on that front as well, is going to help the small businesses and a lot of governments, especially small governments, municipalities and so forth, get through this dilemma that we're all facing. And we're going to see it right here. Federal Chairman Powell just spoke this afternoon and said there's a lot of relief coming on June 1st for businesses and municipalities. So that was a good note for the country, but the Dow really didn't move much, as you see here, was actually down. Is when you're saying you're going to help big businesses with their PPP, meaning protecting their paychecks. But you're not really doing that much for that business to open and start selling stuff. You're just saying, okay, we can pay your people, but as a company, you're really still not producing anything. Think of that. If I own a company and I'm getting relief from the government to pay my people, I'm paying everybody, but there's nothing being made. So that's creating that issue. And then when you're starting to bail out some of the government entities, municipalities, and I still think that's one of the biggest things we have going on in Illinois right now is, and that's a whole different show, is I think, my analogy, and I guess I should just shut up, is, I think our governor's basically shut down the state to hopefully just put it in a real bad situation that the government finally comes in and bails us out on things that our own just government has done. So that's a whole nother point. So the Dow is down today, which I predicted because we had a huge rally yesterday. So now let's get into the forbearance news. Some of the news that did come out in the news today was this. And basically what it's telling you now is right here. There is some guidance from Fannie Mae and Freddie Mac. These are the two entities. Basically, if you're applying for a loan and you apply through me or any other entity out there, mortgage company, we almost all, probably 95% of all loans go through Fannie Mae and Freddie Mac, believe it or not. And you might sit there and say, oh, those companies, they're trash. Well, if it wasn't for them, there really would be no mortgages right now. So what they've come out and said is they've given us some guidance. So here's the interesting part. Let's read on here. Federal FHFA has announced that Fannie and Freddie will permit borrowers to obtain a new mortgage under the following conditions. Those conditions are they have reinstated their mortgage or have continued to make their mortgage payments despite being in forbearance. That's strange, because if you go into forbearance, the whole reason for going into forbearance is to not make 3, 4, 5 mortgage payments at that time. They'll be pushed down the road a little bit. But this is saying, if you filed for forbearance and you continue to make your payments, you can get a new loan. Or where the forbearance has ended, so let's say you take a forbearance for 3, 4, 5, 6 months, you've ended, and then you start making payments and you make 3 consecutive payments after that, then at that point you would be eligible. All right, so let's rewind this a second. If you filed forbearance and you missed a payment, you really can't do anything until you get reinstated or you go back to your payment plan and make 3 payments. All right, or even if it shows forbearance on your credit report, if you can prove that you continually made those payments, you're okay. Which there's no need really at that point to file the forbearance. What's happening with a lot of people, and we're seeing this every day on multiple loans, is somebody, clients or homeowners are calling their mortgage companies and just questioning, what a forbearance is, how do you do it, or whatever, and they get put into the forbearance program. The problem is, up to today, if forbearance showed on your credit report, you could not get a mortgage for 12 months after you started making those payments and got caught up. That was from Fannie Mae. Well, today it came out and it gives you this exact information. So at least we have some guidance now, but if you have a forbearance or you're in a forbearance and you want to refinance and take advantage of these crazy low rates, keep making the payments. If you skip a payment, you're not going to be able to get a loan until you start making your payments again and make 3 consecutive payments. By then, who knows where rates are going to be. Here's my best analogy on how rates are going to move. When they come down slow. When they go up fast. In the past 30 days, I've seen gas prices in my area, I can say in the past week and a half, they've gone from $1.65 to $2.25 almost in about 3-4 days. And because oil has plummeted and then oil recovered a little bit, but then all of a sudden you see the gas prices just spike. So that's kind of concerning, but that's the oil markets and the gasoline markets. So that's that. So now let's get on to what I do on Tuesdays, or try to do every Tuesday, is I try to give you guys some ideas on where my rates are and say, here's why people use me. And it's, a lot of the big reasons is, we have great rates, we have great service, and I hope you like my videos and you get educated by it, and you get a trust level there saying, you know what, you know what you're doing, you sound like you know what you're doing. And when people call me, most of the time you get a hold of me. If you don't, you work with one of my mortgage advisors, you can always ask, and I'll give you a call. I have no problem with that. Introduce myself. You ask me any questions, concerns, issues, anything you have, just let me know. I'd be more than happy to answer. So let's go on and compare some rates today. So we're going to go, I always go to bankrate.com, and I found this other place. It's called NerdWallet, which is kind of cool. It comes out with more rates than most that I can find. So, but Bankrate is huge. It's out in the market and it's huge. And we go to bankrate.com, and today we're gonna focus on FHA and buying a home. Because a lot of people, and FHA is not a subprime loan, it's basically a government guaranteed loan for someone that just doesn't have a big down payment, or they have a little bit of credit challenges. It's not junk loans. It's actually very good quality loans that just fit outside the realm of what they call conventional financing. So FHA, we're gonna put in, you're looking to buy a house, it's a purchase for $250,000. And we got a 4% down. Actually, FHA only requires 3.5, but this system won't allow halves, so I put in 4. I put in the top tier credit score of 740 plus on a 30-year term. I click FHA and nothing appears, which is really odd. Let's go to refinance. Can anybody refinance you out there with that? Oh, here we go. So this InterFirst, they keep popping up, and I don't really get how they do some of these things, but awesome. I've never really heard of them, but they always pop up on this system. So we have a refinance of this criteria of loan, and the rate is 3.125. That's that one. And then the next one in the category is 3.625 or 624. That's odd as well, because usually they go in increments of 8s. So 0.125, 0.25, 0.375, so forth. So that's the criteria. That's what we found on this one. Oh, what's this? All results. It says there's 16 of them. Oh, there's more down here. Cool. So let's see if they could do purchases, because we wanted to focus on purchases today, because I think that market's going to open back up. Nope, there's nothing there. So let's go to NerdWallet. We're going to go over here, and we want to purchase, and it's the same criteria down through here, but they have a credit score of 760. This is another one, which is it's kind of weird, and I'll show you some things that I mean as we go through this. But their best rate in town is 2.75. That is one fantastic rate with $5,000 in fees. That's a crazy amount of fees. All right. So now we have on here, we have nothing for purchases, and we have this for on this site. So I'm going to log into my account, and bear with me a second. I'm going to plug in all my data. Let's see what's going on with the MBS market. What's going on? It's ticking up a little bit more, which is good. It is 3:13 Central Standard Time in my area. So let's go back and find what is our loan amount. Let's see. Hold on, you're going to say 300. I'm going to change this to 300 with 4% down. Let's see, did anything come up? No. Okay, well, there's nothing there. So we have a $300,000 purchase. We're going to go into my site. 300,000. It's a purchase. And so let's just, for comparison reasons, we're going to go with a 4% down because that's what all the other ones do. So $288,000 mortgage. We're going to have a 740 credit score, a debt ratio of 25%. The street address and everything else, I hate to say it, is irrelevant unless you're looking at a high cost or a high valued loan. And we're going to go FHA. And this is scanning my entire system right now for my rates. So that'll pop up in 1 second. So here we go. So we're going to go to this one. It's Ginnie Mae. Ginnie Mae is the FHA programs that we have. And let's go through this. So right now we have, let's go to my bottom tiered. 2.75 would cost you $1,900. Nothing there. 2.75 would cost you $5,066. Well, I can save you about $3,000 in that case. So I beat this one. Let's go down to this 475. That's not even in the ball. I can't even give you a rate that high. So we'll leave that at that. Okay, so that's where we sit on today with FHA purchases. So I just scanned bankrate.com and NerdWallet that had, technically hundreds of mortgage lenders on there. And this is where it comes down to. Now let's go to this. Let's say, for example, we're on NerdWallet and they give us these rates. So now let's go down to a 700 credit score. Let's see where this puts us. See if we have the same rates and the same programs. 275, it's basically the same. So now under 700, let's see where that takes us. 275, they're the only G or Go Mortgage, never heard of them ever. Let's see how far down they go. They're gone. It is 640. Let's go to 660. They're gone there. 680. They pop up at 680. So minimum credit score there is 680. Bank rate, you can't even get it with a 740. I'm going to change my criteria to a 680 and let you know what I have. Well, let's do this. If you have a 660 credit score, nobody out there is doing your loan. So let's see what I can do for you. Can I do the loan for you at a 660 credit score? Let's go down and see where the rates are. This will tell me, one, if I can do it and where my rate is. So I can do that. And basically, you would be looking at a rate of approximately 3.75. You might say, Dan, that's high. Well, unfortunately, it's 660. No lender in NerdWallet will do the loan. And there's no lender in Bankrate that'll do the loan. So for example, though, let me just prove to you that there are lenders in, for example, NerdWallet. So I just want to show you that there are plenty of, let's just go to mortgages. And let's say best FHA lenders. So I want you to see that there are, look at all the companies. There's tons of them. And this is what I was saying before in some of my other videos. Fairway, where are they? Quicken, Rocket Mortgage, Citibank, Flagstar, Bank of America. They're here, but they're not doing these loans. So that is very, very odd. So for example, they even say that they'll go down to a 580 credit score. Well, when we ran that, why wouldn't they do the loan? It didn't pick up that they're in there. So basically a lot of these companies basically, I won't say shut their doors, they shut off the faucet because they're not really doing a lot of business right now because there is huge turmoil in the industry right now. So that is today's video. Let me show you how to get a hold of me. The best way to get a hold of me is just give us a call at 844-775-5626, or you can go to thefrioteam.com. It's right here. Or if you want to email me, I'd love to answer any of your questions. You can email me at dfrio, which is F-R-I-O, at preferredrate.com. That's probably the easiest way, though, to get a hold of me is by giving us a call at 844-775. Let me see if I can move this over. I can't. I apologize. 844-775-LOAN, and loan is 5626. And you can also click down below in the description, and there are links to the applications there as well. So I hope you like the video. If you do, what I'd like you to do is, if you could, please give me a thumbs up, and please mark down the share button down below. And if you would also, leave some ideas down there. What do you want my videos to talk about? Where are you confused? Because we get loan estimates every day from other people looking for mortgages, and we're killing the rates and the fees. So here's what I mean by that. If you're in the process of getting a mortgage right now, the lender has to send you either like a settlement worksheet or what we call a loan estimate. That loan estimate goes over your loan amount, the rate, and then on page 2 is all the good stuff. It goes over how much that's really costing you to get that loan. And in a lot of cases, it's about $4,000 to $6,000 or $8,000. And in most cases, I'm beating everybody in rate or costs or all the above. So I'd love to be able to help you if I can. If you have a mortgage right now and your rate is over 4%, please shoot me a copy of your mortgage statement. Give me in there, it'll give me your name, it'll give me your address, to give me your mortgage balance. From your address, I can look up and see how much that your home is worth. And then kind of have an idea, loan amount versus your house value. But the only thing I don't have is what your mortgage or your credit score is. So if you can just give me an idea what you think your credit score is, I can get back with you and say, you know what, great news. We can save you. We can reduce your rate 1 full percent and save you $500. And because you saw me on YouTube, I might waive some fees for you. So I have the ability to do that. So please look out for some help. And in most cases, we're allowing people to save up to 2 mortgage payments. And what I mean by that is skip 2 mortgage payments. So if you start now and we close you in June, you can maybe skip your June and July house payments. That could help you out quite a bit as well. So God bless. I want to thank you all for watching. Please don't forget to give me a thumbs up. Reach out to us. We'd love to help. I will see you tomorrow, same time, same place. God bless. See you.